Realitní developer CTP reportoval výsledky za první kvartál. Spojili jsme se proto s jeho finančním ředitelem Richardem Wilkinsonem. Jelikož si o této společnosti povídáme poprvé, rád bych vám ji představil ve 3 snímcích z její investiční prezentace. Příběh společnosti CTP sahá do 90. let, kdy její zakladatel Ramon Voss otevřel první sklad v Českém Pelhřimově. Od té doby se společnost rozrostla i na Slovensko, Maďarsko, Rumunsko a nyní expanduje i do nových trhů, ať už Bulharska, Polska nebo západních trhů, jako je Nizozemí, Německo a Rakousko. Česká republika ovšem nadále hraje významnou roli pro celou společnost, když hodnota aktiv v České republice činí přibližně 42% celkových aktiv, následovaná Rumunskem s 15%, Maďarskem s 8% a Slovenskem se 7%. Společnost CTP má zajímavý obchodní model, kdy kombinuje model developera a provozovatele logistických parků. Momentálně disponuje více než 26 miliony čtverečních metrů nerozvinuté plochy a 13 miliony čtverečními metry v existujících parcích, které mají přes 1500 klientů. A jak společnost tyto parky buduje? Aby společnost získala 1 metr čtvereční v hodnotě přes 1000 euro na metr čtvereční, potřebuje 2 metry čtvereční volné půdy, kdy předpokládá zastavěnost z 50%, stavební náklady ve výši 500 euro na metr čtvereční, čímž pádem celkové náklady na metr čtvereční činí 620 euro, z čehož plyne i zisk přecenění. A nyní pojďme k samotnému rozhovoru. Hello Richard, thank you for joining us today.
It's my pleasure, Jan. Thank you for the invitation.
Thank you. Recently you published your Q1 results in which the net rental income grew by 17% to 179 million euros. What factors drove it up year over year?
Yeah, there's 2 main drivers there. Jan, the first one is, as CTP, we've always been developing and growing our business by between 10 and 15% a year. So we build another 10 to 15% on the portfolio. So last year we delivered 1.3 million square meters of GLA, 95% leased. So that's the main driver of the increase. And then the second driver of the increase is the annual rental uplift that we get at the start of the year, where 71% of our contracts are linked to inflation, and for the other contracts there's an annual escalator, fixed escalator of between 1.5% and 2%. So those are the main factors driving the increase.
Looking further down at the profits, you reported a 7% increase in the adjusted EPS and confirmed your guidance of 0.86 to 0.88 for the whole year, which translates to 8 or 10% growth. What are the main opportunities or risks for this guidance? What should drive the performance further in the next years?
Yeah, look, so this year the growth in the earnings per share is a bit lower. So you see the gross rental revenue went up by 16%. The net rental income went up by 17%. Costs, operating costs are well in check. The one thing that we have and that everyone will have going forward is an increased cost of funding. So we basically repriced all of the cheap funding that we were able to get in 2020, 2021, when interest rates were effectively zero. And so our average cost of debt is increased. So that's what is meaning that the earnings per share is growing a bit slower than the top line. Yeah. But next year, when we continue to add another 10 to 15%, the earnings per share growth should also then go back up to above double digit. So for this year, we're happy with that we are 8 to 10% growth, but going forward should go back to being more than 10.
Okay, thank you. Looking at the signed leases, they increased by 24% to 416,000 square meters, with prices increasing by 3% to 6.17 euros per square meter. From what sectors and countries is the most interest coming from? And do you see the impact of nearshoring?
Yeah, so it's a broad range of sectors. So it's 3PL, so the logistics companies. So as companies continue to professionalize their distribution value chains and outsource to 3PLs, there you see a growth in demand, and that's our largest single tenant group. But you also see an ongoing demand from retailers as retail spending goes up in Central Europe, as disposable incomes go up in Central Europe. And finally, you see a significant pickup, an easier to identify pickup in nearshoring. The way that we highlight that is by looking at the share of Asian clients in our portfolio. And in across the whole portfolio, Asian tenants make up around 8% of the total tenant base. In the last 12 months, and that's all manufacturers, they make up 20% of all of our leasing. And last year we released 2.1 million square meters, and as you said, we did the 417,000 in Q1. So you see through the Asian companies and that they are manufacturers, they're coming to Europe to produce, to sell in Europe. Europe is still 25% of the world's GDP. It's the largest single market in the world. So as tariffs increase across the world, as friction in global trade increases across the world, so Asian tenants, also American tenants or companies will need to come to Europe to produce in Europe to sell to European consumers. So yes, we do really see that trend kicking on.
In April, you participated as the Czech national partner at the Expo 25 in Osaka. And in the press release, you said that you see the Czech Republic as a gateway to the European market. Why do you think it is attractive?
Look, the Czech Republic has always been one of the most attractive markets in Europe. If you look at any of the surveys for the relative attractiveness of foreign direct investment, the Czechs have always performed extremely well. So relative to the size of the economy, Czechs over proportionally attract foreign direct investment. That's driven by having a highly talented, skilled, educated workforce, and still competitive all-in labor costs. So it's not that salaries per se are that much lower than in some Western European countries in the meantime, but the effective cost for the employer is still materially lower because the social security contributions are that much lower. So Czech Republic is still a materially cheaper location than Western Europe. It's around a half of the fully loaded costs for blue collar, so it's still a very attractive market overall.
In the Q&A with analysts, you mentioned that in most CEE countries, inflation-adjusted real rents remain lower than 15 years ago. Is there potential, do you see it, to further increase rents?
Yeah, we think the rents will continue to increase over time, and that will happen at different speeds in different economies. If you look at the Czech market had the fastest growing rents in Europe for 2.5 years, and that rental growth is slowing down. That's normal because things don't carry on at turbo speed forever. Yeah, but then other markets will kick in. So we are active in 10 markets. So that gives us the opportunity to benefit from the markets where it's going, where that trend is going a bit quicker at the moment, but also consolidate the position in markets where rents went up materially in the recent past.
Mm-hmm. You invest not only in the region of CEE, but also recently have entered the markets in Netherlands, Germany, and in May you announced 100 million euros investment in Austria with a goal to develop 220,000 square meters of new space by the end of next year. What is your investment rationale in these markets?
Look, no, our investments and our expansion have always been driven by what our tenants need, because that's actually what we're doing. What we're doing is we build buildings and we own them and we operate them. And that only makes sense if we have happy tenants. So for us, the expansion that we do, also the development expansion that we do, is driven by our tenant needs. Mm-hmm. And if you look at it, the major international clients prefer to have fewer landlords. So they like to have a simple system. So with tenants who are leasing their 15th, 18th, 20th space from us, they know what a CTP building looks like. They know what a CTP lease looks like. We agree on the price, and then that's the only thing that they need to worry about. And if, unlikely, but if something would go wrong, then they know where to call and get a quick solution to the problem. Now, that's very different if they would have 20 different landlords. That would make their life a lot more complicated. So, and if you look at the international clients who are our largest tenants, they're all active in Western European markets. So the logic is to be able to serve your tenants in more markets on a consistent and ongoing basis. So that's and the second argument is we can make good money in those markets. So, very simple. We are a for-profit company. We try every day to make a bit more money than we did the day before. And we can make very nice money in those markets. So, yeah. So it makes sense from a business rationale, but also very much from a financial rationale as well.
So, client-driven, profitable expansion to Western markets.
Absolutely.
Your annualized rental income increased by 14% to almost 750 million euros. What factors should help you reach your goal of over 1 billion euros in 2027 and over 1.2 billion in the medium to long term?
Yeah, so the main driver goes back to your very first question, Jan. The main driver is the development. So if you look at our portfolio, we built around 80% of the 13.4 million square meters that we own. We bought the other 20%. Yeah, so the main driver of growth for CTP has been through the last 28 years and will continue to be for the next years, development. So building on the land bank that we have, which is mostly in and around our existing parks. So we're building for our tenants where we know that they want to be, because that's where they already are. That's our business model. So that will be the main driver of the growth. And as I said earlier, we grow 10 to 15% on an organic basis every year. And to do that, we don't need to come to the equity markets and ask for capital. We're able to generate the equity for that ourselves. And that's what we've been doing for the last 25 years. And when we listed in 2021, that gave us the ability to accelerate our growth. So over the last 4 years, we've more than doubled the company on basically every metric, whether that's rental income, whether that's GLA, whether that's land bank. So we're able to grow faster, but also at an extremely profitable rate. So, the fastest growing, most profitable real estate company in Europe at the moment.
Thank you. I urge everyone to check your earnings presentation, because just as you were talking about your growth of the gross lettable area, I was thinking of a graph from your presentation. This year you are expecting to deliver between 1.2 and 1.7 million square meters, with deliveries traditionally skewed towards the last quarter. How is the market demand developing?
Yeah, look, I think you've seen that we did record leasing last year. We did 24% more leasing in Q1 of 25 than we did in Q1 of 24. Now, be a bit careful of over interpreting one quarter, because if I sign a lease on the 31st of March, it counts in Q1. If I sign it on the 1st of April, it counts in Q2. So look at longer term. But you see our leasing continually ticking up. And you see that going in both dimensions that we care about. The one, the absolute size of leasing that we're signing, but the other, the price that we're able to get for the sort of rents that we're able to achieve. So we continue to see ongoing growth in the Central European markets, but also in the Western European markets. Western Europe will grow a bit slower because Western Europe is a lot more saturated. Average square meters per capita in Western Europe is 1.2. Average in Central Europe is 0.6. So there's still a lot of catch up in Central Europe to get to Western European levels of saturation. And we think that that will drive space, but also rental growth.
In Q1, you raised 1.2 billion by issuing bonds, and you also negotiated margin reduction on some of your bank loans. How were your inaugural samurai bonds in Japan received?
Yeah, so it was a samurai loan. It wasn't a bond. So we did 2 euro bonds, which was the billion, and we did a samurai loan. So it was extremely well received. We actually did a lot more than we were originally thinking. We were able to attract 12 new banks to our financing, to our pool of financiers, which was more than we expected, better than we were hoping for. So we're very, very happy with that development. And the reason to go to Japan, it's the third largest pool of liquidity in the world after dollars and euros. And the Japanese market is a bit asynchronous to, or goes at a different wave, different time to the European market. So we think that the Japanese market will be open and attractive at times when Europe may be a bit more difficult. So, for example, the Japanese are in interest rate increase mode, whereas the rest of the world is in rate decrease mode at the moment. So that's the indication that they move at a slightly different cycle. And in terms of funding, having a diversified pool of financiers and having as wide access to liquidity as possible is extremely important for us.
Mm-hmm. If I understand it right, these loans are fully hedged into euros, right?
Yeah, swap back into euros. Yeah, so we swap everything into fixed rate euros. So 99.9% of all of our debt is in fixed rate.
Thank you. Now, looking at the dividend policy, you increased your dividend by 12% to the total for 2024, 59 euro cents, and over 2/3 of shareholders opted for a dividend in shares. What is generally your approach to dividends and dividend policy?
Yeah, so we have the policy to pay out 70 to 80% of our EPRA earnings per share. So for this year, the EPRA earnings per share is forecast to be between 86 and 88. So we will be paying out between 70 and 80% of that. The default dividend is shares, because as a growing company, we like to keep the capital that we generate. The same as every growth company. That's normal, yeah? But we know that a lot of investors have a dividend requirement in their investment policy. So there is the opportunity for people to take cash, but they choose to take cash. If they don't choose to take cash, then they will get shares.
Okay, thank you very much. Thank you very much for your questions and your time. And I hope to see you again after maybe your results for the first half of the year.
Yeah, it's my pleasure, Jan. Great to talk. Thank you.
Thank you very much.